What's going on, Investomaniacs? Knight Rider here, and today we're taking a look at the one, the only, the big dog, Apple. Hey, this is Q2 2019. Analysts were expecting $2.37 in earnings on a GAAP basis. Apple delivered $2.46. That's a 3.8% beat. Analysts were looking for $57.49 billion in revenue, and $58 billion was delivered. That's a 1.1% beat on revenue. The service revenue was expected to come in at $11.2 billion, and Apple delivered $11.45 billion, so you got a beat there as well. You had $30.5 billion expected in iPhone revenue, $31.05 billion was delivered, another beat, and $52.22 billion was expected for Q3 guidance on revenue, and Apple actually guided at 52.5 to 54.5 billion, so the overall averaging a little bit higher than was expecting. Also, Apple announced an increase of dividend going up to 77 cents, which is a 5.5% increase from the former 73-cent dividend, and the board authorized an additional $75 billion in stock. This result, it was accepted very well by investors, and thus far today we're up about 6.5%. What's particularly impressive about this quarter is that Apple did this in a suboptimal environment with US-China trade tensions pretty high right now. Formerly, roughly about almost 20% of revenue was coming from China, and China sales are now down 21.5% year over year. That's a significant decrease they're seeing in Chinese sales, and yet they're still growing overall. So if the China-US trade tensions can kind of improve, that will be good for Apple and will have even better results. With the iPhone sales slowing, Apple is placing a higher priority on increasing the monetization for its existing active units. Apple CEO Tim Cook stated, quote, "Our March quarter results show the continued strength of our installed base of over 1.4 billion active devices, as we set an all-time record for services and the strong momentum of our wearables, home, and accessories category, which set a new March quarter record." Apple's services segment was up 16% year over year. On March 25th, so that's about 5 weeks ago, Apple announced an Apple credit card, Apple TV Plus, which is Apple's own streaming TV channel, and Apple Arcade, which is going to be a video game subscription with over 100 original titles. These new service segments should help further fuel Apple's service stream growth, which currently consists of 19.7% of total sales. That's been improving over the years, or been increasing rather over the years, and is expected to continue to grow as a percentage of total income. Tim Cook also noted, quote, "We delivered our strongest iPad growth in 6 years, and we are as excited as ever about our pipeline of innovative hardware, software, and services. That was a surprise for investors that they had strong iPad growth, not something we were expecting, yet a little bit of a freebie there." So this was a solid quarter, good just all around. There weren't any glaring weak points in there. All around, better than expected. Hey, Apple, it's a buy just like it's been for years and years. Hope you guys have a great day.